Hello kind people of YouTube and welcome back to another video. We have a bunch of things to talk about today. They're not the most exciting, but they are important, so let's jump into it. And let's do the most annoying story first. If you remember the other day I talked about a report by a research firm called Messari. I was incredibly critical of that report there and of crypto pages that were reporting on it, that were essentially writing hit pieces on XRP. It was a very unfair report that applied a standard to XRP, a very critical standard to XRP that is not being applied to any other cryptocurrency, and as such was incredibly biased and not really worth even talking about, but I felt the need to quickly debunk its core points because they were utterly ridiculous. Unfortunately, it appears some people went way further, and let's read this briefly, and then we'll talk about it. Ryan Serkis, the CEO of cryptocurrency analytics firm Messari, has allegedly received threats after his company published a critical analysis of the XRP cryptocurrency. Serkis made this claim in a tweet posted on January 24th. Research firm Messari published a report on January 24th claiming that the market cap of XRP is likely overvalued by $6.1 billion. The company reportedly based its analysis on data from cryptocurrency exchanges and third-party cryptocurrency data services. Following the publication, the CEO and founder of Messari, Ryan Serkis, posted a tweet alleging that he received a threatening call from an anonymous caller. This is his tweet. "Someone just called me from a Nashville number and recited my wife's birthday to me, then hung up." Now, of course, I'm not saying that we necessarily have to believe him here because I don't believe we have received any proof of these calls, but just assume for a moment that he doesn't have a reason to lie here, and just imagine someone calls you up an unknown number and they just say your wife's birth date. That is creepy and you are instantly feeling severely threatened. So I give him the benefit of the doubt here, as I typically do. I see very little reason for him to lie about these things. And just imagine getting that, and just you might wonder, it just calls, why is he scared? Why is he even talking about this? Because when someone calls you out of nowhere, unknown number, you have no idea who this person is, and they just recite personal information, and not even yours, but your wife's, that is scary. That is something a psychopath does. But let's continue. In a follow-up tweet, Serkis announced that he received 2 more threatening calls and asked several high-ranking employees of Ripple, including its CEO Brett Garlinghouse, CTO David Schwartz, and SVP of Marketing and Communications Monica Long, to denounce the threats against his family, which, as he alleged, are coming from the XRP community. And here he said, "I want Ripple, Brett Garlinghouse, Monica Long, Corey TV, Joel Katz, Var Powell to denounce any XRP community threats against my family. I'm going to the FBI and local police after 3 calls, ensuring our family doesn't get swatted." As of press time, neither Ripple itself nor any of its individual employees mentioned in Ryan Serkis' tweet have commented on the alleged threatening calls. Both Messari and its CEO have not yet responded to Cointelegraph's request for comment. After going to a police station to report the calls, Serkis posted another tweet, apparently confirming that the callers were not actually affiliated with Ripple. And he said here, "I'm at the police station, it's a punk kid most likely." Just to be clear here, he never actually alleged they were associated with Ripple. He alleged they were associated with the XRP community. Those are completely separate things. And yeah, okay, let's just get the first thing out of the way. Is it possible that he made this up? Yes, possible. Do I think it's likely or that he had any reason to do so? No. I don't believe that he made these calls up. I think somebody within the XRP community, possibly just one person, was playing a prank here, but you just have to keep in mind how this is being received. Because look at how many views this article has. That is about 10 times the views most articles on Cointelegraph that I talk about on this channel have. This is getting so much more attention, and it's likely just one asshole in the XRP community who decided he's gonna be, excuse my language, a little piece of shit, and call this person up personally. Now, I have been extremely critical of his report, and I continue to be, but it's one thing to be critical online of published data, of a published report, of a published statement. It's another to take it personal, to find out their number, to find out personal information about them and their family, and to contact them with that. That is one step removed from doxing, where you share someone's private information on the internet. And I have seen some claims, I have not verified them, so let me just say that upfront, I have not personally verified this. But I have seen some people say that he was actually doxed as well, that some people in the XRP community on Twitter were sharing personal data because of this report he wrote. That is unacceptable, and thankfully, doxing is becoming illegal in more and more countries and in more states. Because it needs to be. Because do you know what doxing leads to? Doxing leads to people coming to someone's house. Doxing leads to people going after someone's family. Doxing leads to people releasing private, sometimes dangerous information about an individual online. Doxing has led to people dying. Doxing has led to people being swatted, to people calling a SWAT team on somebody. And those people were then shot. That has happened before. So this is not a simple issue. This is not just a tiny little prank. This is one step away from doxing. And especially if reports are true that this data has appeared online. So yeah, and there, like I said, there is a chance that he made this up. That is always a possibility, but I don't see why we should assume that here, because there's very little reason to assume that. And if you know my channel, you know I like to give the benefit of the doubt even to people I don't like. I don't like this guy, but that is not a reason to call him and to threaten him. And that is what calls like this are. If you think calling someone and just reciting their wife's birthday, telling them that you, by doing that you have their phone number and that you have some of their personal information of the people close to them. And no, I don't want to do that now. If you're trying to tell me that that is not a threat, you are, and once again, excuse my language, full of shit. But yeah, this is just unacceptable. And the worst thing about this, whether this happened or not, I have seen a lot of people, and a lot is maybe an overstatement, but I have seen a significant number of people. Many people have rightfully called this out for how unacceptable this is. But unfortunately, in the XRP community, I've seen quite some people rejoice at this. I've seen people celebrate this. Is this really how you want our community to behave? Is this the image that you want the XRP community to give off? We already have a bad image. People already don't respect the XRP community as they are represented on the internet. Because you have people constantly tweeting XRP 589 under everything. You have members of the XRP community constantly attacking and being disrespectful to other projects for no reason. You have the XRP community constantly spamming under unrelated topics, unrelated messages, unrelated social media posts. We are already not well respected as an online community. And this, you see how many people read this article. This is just the article on Cointelegraph. Now, just consider how many people saw the headline and didn't click on it. How many people saw this shared on social media and didn't click on it. Hundreds of thousands of people saw this headline. And this is just one page that was reporting on this. And this reflects terribly on the XRP community, and by extension on XRP, and by extension on Ripple, even though Ripple did nothing here. Ripple did absolutely nothing wrong here, and it's a bit ridiculous that he expected people from Ripple to speak up against this, because this is not their fault, and they are not the arbiters of the XRP community. XRP as a cryptocurrency is stand-alone, and XRP's community stands separate from Ripple as a company. So no, Brett Garlinghouse doesn't need to speak up against this. But I, as a member of the XRP community, as a vocal proponent of XRP, I have made so many videos that are positive about XRP. I feel the need to speak up against this and completely disavow this behavior. This does not represent me. This does not represent the parts of the XRP community that I stand with. I think we are better than this, and I just wanted to say that. Let's continue with some actual news. We got a Van Eck Associate CEO going on the record saying that we see a shift in investment strategies away from Bitcoin and back to gold. But this is not necessarily as bad as it appears, so let's read this. Jan van Eck, CEO of Van Eck Associates, suggested that Bitcoin investors have moved to gold during an interview with CNBC published on January 26th. Van Eck declared that he thinks that Bitcoin pulled a bit of demand away from gold last year in 2017. Afterward, he concluded, Interestingly, we just polled 4,000 Bitcoin investors and their number one investment for 2019 is actually gold. So gold lost to Bitcoin and now it's going the other way. During the same interview while talking about Bitcoin exchange-traded funds, Tim Seamer, founder and chief investment officer of Seamer Asset Management, declared that Bitcoin's function as a store of value is questionable. Not only have we lost all liquidity on the underlying commodity, but truly outside of the existential blockchain argument, it's been very difficult to argue store of value, which is really what we started hearing about. Gold is a store of value and there's no disputing that. Essentially, this is as far as we need to go in this article, and I have mixed thoughts about this. Okay, for starters, it is of course not nice to hear that a lot of investors are looking more at gold than at Bitcoin right now. But you have to keep in mind, this doesn't necessarily mean that they're pulling their money out of Bitcoin and out of cryptocurrencies to move it into gold. This is what they're looking into as an investment for 2019. That likely means there will be fresh money going into it, not money pulled out of crypto, because crypto, for most of these investors, if they pulled their money out of crypto now, they would be losing money. They are not going to do that to invest back into gold. Furthermore, you have a lot of first-time crypto investors who invested heavily into crypto and into Bitcoin in particular in 2018. Of course, most of those have now invested as much as they were going to invest in there, and for 2019 are looking at more proven, more comfortable investments. So I don't think this is quite as apocalyptic as some people think it is. What I do think is interesting and is a real issue here is the statement by Tim Seamer that this is hurting the store of value argument. And the store of value argument has been questionable, let's say, for a while. Because no cryptocurrency outside of stablecoins has the kind of stability and the kind of long-term track record that something like most fiat currencies, that something like a stock portfolio, that something like a precious metal has. That is a simple fact. That is currently undeniable. People want to look at something like Bitcoin as a store of value. And in some regards, it can be considered one. But generally, a store of value does not drop 80% of its value year over year. That doesn't happen. It is not a store of value if it does that. So right now, it is only a store of value relative to some other projects that have fared even worse. Bitcoin is currently a store of value within the cryptocurrency space, where in a bear market, Bitcoin tends to fall less than altcoins. Bitcoin has the potential to become an effective store of value in the future, because being a store of value is all about perception and stability. If it reaches that stability, and it already has that perception for some people, it will be considered and accepted as a store of value. But right now, we are not there yet. We are not there yet. And people moving away from Bitcoin in favor of gold currently means that they do not trust it as a store of value yet. Within the crypto space, Bitcoin is being accepted as a store of value. Outside the crypto space, crypto in general and Bitcoin in particular is a speculative asset, not a store of value. People are speculating on massive gains in the future, not on it retaining its value. Those are very different investment strategies. When traditional investors, when big money wants a store of value, they do not currently go for Bitcoin. They might go for Bitcoin in the future, they don't currently. And we need to keep that in mind. In my opinion, when we're arguing for the value of cryptocurrencies, we should not be applying a store of value argument, because there are already plenty good store of values that have a better track record currently than cryptocurrency. Currently, cryptocurrencies are interesting for their massive fluctuations compared to most other traditional assets, and for the massive growth that they have seen in the last couple of years as a speculative asset. And on the other side, the projects that are really at the forefront technologically, that are backed by large companies, that are building a lot of partnerships, are interesting for their technological potential. If you're looking at something like EOS or XRP or Cardano or even Ethereum, you're not looking at it necessarily as a speculative asset. You're not looking at it as something that fluctuates in price and might go up because the markets go up. But instead, that is something that investors look at like a company. That is something that you can look at for its future market potential and price accordingly. And it is not speculation as much as it is prediction at that point. And I think that is the core point that we should be making when we're advocating cryptocurrencies as investments. Don't look at store of value or fluctuation. Currently, we do not have a good argument for any cryptocurrency to be a store of value, except maybe stablecoins. And even then, our biggest stablecoins have not been as stable as we would like them to be. Tether in particular did absolutely terribly for a couple of weeks, where it was completely untethered from the price it was supposed to have. And if we're looking at something like Bitcoin or any major cryptocurrency, we cannot really call them stores of value at this current point. Currently, something like Bitcoin is a store of value within the context of hyperinflation in Venezuela, but not within the context of generally stable currencies in most world markets, not within the context of gold and silver being generally stable, not within the context of the stock market generally fluctuating less. They're currently not stores of value. And that argument is something that essentially you only hear Bitcoin maximalists even buying into, because they have to buy into it. As a Bitcoin maximalist right now, Bitcoin has immense potential for the future with second layer solutions, third layer solutions to do a lot of things. But if you're talking about what it does right now, they can't have faith in its technology. They can't talk about its current use cases, because currently other cryptocurrencies beat it there. Store of value is the only argument that is left for Bitcoin maximalists at the current point. So they kind of have to buy into this. But if you look at it just briefly, it kind of falls apart. And I just wanted to briefly point this out. People within the finance world recognize this. When people are investing in Bitcoin, they're not investing as a store of value. They are investing as a speculative asset. And that is why you see relatively small portions of their investment portfolios going into crypto and going into Bitcoin. A lot of them are investing into Bitcoin, and they are investing significant amounts. But as a share of their total portfolio, it tends to be relatively low, because they're looking at it as highly, highly volatile as speculation. And if they were looking at it as stores of value, they would be treating it very differently. Okay, let's talk some more crypto criticisms. I'm really not in the mood for it today, but let's just very briefly talk about this, because Roubini has been in the news so many times, and this is what I want to advocate here. Let's just ignore this guy, because look at his headline. Blockchain is no better than an Excel spreadsheet. Do we really need to give this guy any more attention? I mean, I trust that he is a skilled and well-known and well-researched economist who has done some good work in that realm in the past. But whenever he's talking about blockchain, he's just showing off that he is completely inept technologically and that he has no idea what he's talking about. I completely trust him on economical issues. I do not trust him on tech and cryptocurrency issues. And let's just read the first couple paragraphs of this and then we're going to move on. Roubini, a notorious cryptocurrency critic, has stated that blockchain is no better than an Excel spreadsheet during a panel hosted by crypto exchange LA Token on January 25th. Roubini is also known for having predicted the 2008 financial crisis, earning himself the moniker of Dr. Doom. Speaking during a panel at the Blockchain Economic Forum in Davos, Roubini defined blockchain as the most overhyped technology ever, while noting that Bitcoin and other cryptocurrencies are the mother of all bubbles. He also pointed out during the talk that blockchain and crypto have nothing to do with fintech and private distributed ledger technology. I mean, this is so deep in he's not even wrong category. Do we really need to talk about this guy? Really? Do we? Why does he keep getting headline articles? See, this is why I'm not even going to continue reading, because I've talked about him and argued against his position so many times. And they're so blatantly false and uninformed. And he's phrasing them in a way that he will get maximum media attention and create maximum outrage. And honestly, he is just an attention whore. That is all he is. So yes, I recognize I talked about him myself just now, but only to advocate for ignoring him in the future. And I think we would be, unless he does something actually relevant, I'm probably not going to be talking about him in the near future. And I think everyone should just kind of ignore him, because he's living for the attention. He is making sure that every time he talks, there's at least one thing that will fill headlines, whether it makes sense or not. So let's just ignore this guy. Last but not least, some ETF news. New details have surfaced about the Bitcoin exchange-traded fund proposed by Bitwise and NYSE Arca. Bitwise Asset Management announced its intention to launch the ETF earlier this month. If approved, it would be the first Bitcoin ETF to make it to the market in the US. Remember, we talked about this on the channel. At the time, the company said NYSE Arca would file the 19b4 rule change proposal in the near future. They indeed filed the form the same day, but it does not appear to be listed on any SEC website, possibly due to the ongoing US government shutdown. A little update: that shutdown is currently over, but only temporarily, I believe. As a result, the document went largely unnoticed, despite being posted on NYSE Arca's own website. When Bitwise first announced the ETF proposal, the company said it differed from previous such efforts because a regulated third-party custodian would store the bitcoins. The company also said it would draw pricing data from a large number of exchanges, including both spot and physically settled futures markets, to calculate the index determining the asset's value. And this is essentially what they did to differentiate themselves from previous ETF proposals that have been rejected. Essentially, what these are all trying to do is they're trying to find the sweet spot where they will essentially make the SEC happy and allow one of these to be approved. And essentially, we're moving with every one of these proposals, we're always moving one small step closer to what we think they want until we finally get to the point where they agree to one. The filed proposal elaborates on the methodology, noting, for example, that these prices will be weighted such as Bitcoin prices from exchanges with a greater amount of the trading volume in the prior hour are weighed more heavily than Bitcoin prices from exchanges with lesser amounts of volume. The exchange believes that the proposed rule change is designed to prevent fraudulent and manipulative acts and practices and to protect investors and the public interest. In previous ETF rejections, the SEC has highlighted concerns about market manipulation. Of course, unfortunately, with most major exchanges, or at least many major exchanges, having at least been accused of faking their volume, there will always be a concern of market manipulations when you take your data from exchanges. There's currently no way around that. NYSE Arca's proposal also touched on concerns about what impact any such manipulation might have on the Bitcoin market, stating, "Given the fungible nature of Bitcoin, the index provider believes that the potential impact on index values of individual exchanges experiencing outside attempts to manipulate either reported volume or reported prices is muted by the use of a large number of exchange price and volume inputs," which generally is a good point to be made. If you're using a lot of different inputs, any one of them being manipulated or being overstated or being wrong won't generally mess with the overall number. While NYSE Arca has filed the proposal, the clock has not yet started for its approval or rejection. Attorney Jake Chervinsky, a law firm Cobra Kim, told CoinDesk that the SEC's deadline for deciding an ETF proposal is triggered by publication in the Federal Register. And of course, with the shutdown going on right now, it hasn't been introduced there yet. That is really all we need here. Essentially, now that the shutdown is at least, unless my information is off, I haven't been keeping up too closely with American political news the last couple of days. To my knowledge, the shutdown is temporarily halted until the middle of next month. And pretty much all the deadlines start the moment they properly file this from the SEC's side. Now, unfortunately, with the shutdown possibly restarting in the middle of next month, I kind of hope that they don't file anything yet, that they wait until the shutdown is properly over, but we will see. Ultimately, if we finally get an ETF approved, that could mean major movement in the markets, that could mean major movement from whales, a major movement from institutional investors into the crypto markets, and that is ultimately one of the things that I'm hoping for potentially causing the next bull run. All of this has been pushed back for a variety of reasons, and right now the main one is the government shutdown in the US that has really been messing with everything. Let's hope all of this will be properly resolved. And with that, I will end this video. As always, thank you so much for watching. If you want to read any of these articles yourself, the links will be in the description. If you enjoy my content, I would really appreciate if you could support my channel. There's a Patreon link, there are donation addresses in the description. If you don't want to or can't send me any money, I would really appreciate just your likes and comments. It really helps the channel get discovered. And in the description, you'll also find my social media links. Thanks for watching.